Hey there, everyone! Welcome back to our channel. If you're new here, I'm David, and today we're diving into a topic that's super important for anyone interested in investing. Whether you're just starting out or considering your first investment, learning from others' mistakes can save you a lot of time, money, and stress. So, let's talk about the best beginner investing mistakes to learn from. Investing can be an exciting journey, but it can also be intimidating, especially when you're just starting. There's a lot of information out there, and it's easy to get overwhelmed. So, what are the common missteps that new investors often make? And more importantly, how can you avoid them? Before we jump into the details, here's a key question to think about. What is the biggest mistake you think beginner investors make? Is it timing the market, emotional decision-making, or maybe something else entirely? Let's find out. Alright, let's start with one of the most common mistakes, not doing enough research. Many beginners jump into investing without fully understanding the companies or assets they're putting their money into. For example, during the 2020 stock market surge, many new investors poured their cash into popular stocks like GameStop or AMC without understanding their underlying business models. This led to significant losses when those prices eventually plummeted. Remember, knowledge is power. Take the time to read up on the companies you're interested in, understand their financial health, market position, and future prospects. Resources like Yahoo Finance, Seeking Alpha, and company annual reports can be incredibly helpful. Next up is the mistake of overtrading. It's easy to get caught up in the excitement of the stock market and feel the urge to buy and sell frequently. However, overtrading can seriously affect your returns due to transaction fees and potential tax implications. A study by the research firm Dalda found that the average investor returns significantly lag behind the market due to emotional trading. The key takeaway here? Focus on long-term investing. Try adopting a buy-and-hold strategy, which typically yields better returns over time. Another frequent error is ignoring diversification. Many beginners invest all their money into one or two stocks, which is like putting all your eggs in one basket. If those stocks falter, your entire portfolio can take a hit. A well-diversified portfolio includes a mix of asset classes, stocks, bonds, real estate, and other investments. A study by Vanguard found that proper diversification can reduce risk without sacrificing returns. So, consider spreading your investments across different sectors, geographic regions, and asset types. Now, let's talk about the mistake of chasing past performance. Many new investors fall into the trap of investing in stocks that have recently performed well, thinking they'll continue to soar. However, past performance is not always indicative of future results. A classic example is the dot-com bubble in the late 1990s. Many investors poured money into tech stocks that had skyrocketed, only to see them crash and burn when the bubble burst. Instead of chasing performance, look for strong fundamentals and long-term potential. Another big mistake is underestimating the importance of an emergency fund. Before you start investing, it's crucial to have an emergency fund in place. This fund should cover 3 to 6 months' worth of living expenses. If unexpected expenses arise, you won't be forced to sell your investments at a loss. According to a survey by Bankrate, nearly 25% of Americans have no emergency savings at all. Don't be part of that statistic. Set aside some money before you start investing so you can invest with peace of mind. Lastly, let's discuss emotional investing. Investing can be an emotional roller coaster. You might feel ecstatic when your portfolio is up and panicked when it dips. This emotional response can lead to rash decisions, like selling in a panic or buying into hype. To combat this, develop a well-thought-out investment plan and stick to it, regardless of market fluctuations. Remember, investing is a marathon, not a sprint. Try to stay calm and focused on your long-term goals. So, to wrap things up, remember these common beginner investing mistakes: not doing enough research, overtrading, ignoring diversification, chasing past performance, underestimating the importance of an emergency fund, and emotional investing. Learning from these mistakes can help you navigate the investing world more effectively and set you on the path to financial success. If you found this video helpful, please give it a thumbs up, subscribe to our channel for more educational content, and share your own investing experiences in the comments below. What mistakes have you learned from? Let's support each other on this journey to becoming better investors. Thanks for watching, and remember, investing is a journey. Enjoy the ride. See you next time.